Hi there, good afternoon. Let me introduce my two fellow panelists. We have Russell Pert from Facebook and Megan Caywood from Starling Bank.
Thank you so much.
Please join us. So we have a great topic here around the role of the customer. And I'm just going to start up by asking Russell, you see a lot of different customer interactions. How do you see the needs of customers changing, both in the present, but also looking forwards? What is the different view of the customer that you see emerging in all of this?
So I think, firstly, we live in a mobile world. I think that's clear to everyone. You sort of look at some of the Facebook stats. Over 90% of people on Facebook are on mobile. And with all that data and being a people-based platform, I think there's an expectation by consumers of knowing what is the right moment to contact customers with a particular service or product. So I think expectation of knowing, in life moments, whether it's buying a house, whether it's buying a car, knowing what products to put at what time to what consumers is important. The other aspect to it as well is knowing when to engage the customer. So, time of day, whether it's in the evening, during the day, or in the morning.
And specifically around financial services, how do you see customer needs evolving? And I guess what convergence do you see between those needs for financial services and those needs for, I don't want to say social activities, but broader life activities?
So one of the biggest things when I was working in banking before I joined Facebook, was really about form filling. So form filling for me, when you're looking to buy a financial service product, is sort of the pain in that journey. And anything you can do to make that more frictionless. And I think what we're seeing is this transition into things, around messaging, where you can make much more of a conversational, more humanized experience that requires less form filling. If you think about form filling on paper, that was painful. Then it went to desktop, got a bit easier because you could tab through, look at different menu, pull down different menu buttons. And then it got to mobile and actually it became more difficult again. So I think as we start to transition and start to learn about how users engage on mobile, it's using things like messaging platforms that you can have a humanized experience with. And it's something that's persistent as well. So, if you're having a conversation or you're looking to apply for something via a messaging platform, and then let's say I've got two kids, my kids drag me away to go cook them dinner. When you come back, you can carry on that conversation. That'd be much more seamless rather than sort of being timed out on a form. So I think more towards the messaging side and also towards the artificial intelligence. So being able to create a conversation that's a little bit more immersive, that's not binary as you would see in a traditional form.
Very good. Megan, Starling's been very bold in its vision and keen to serve customers very differently in the future. Any perspectives you would add to this topic?
Definitely. I think what he said really resonates in terms of seeing customer behavior not only shifting towards mobile, but really looking to have a better user experience in financial services, something that's intuitive, that's easy to use. The classic pain points that you'd see in banking around form filling are now easily solvable with technology. So with Starling, we really wanted to focus on the user experience in terms of making the fundamental elements of banking very easy and simple. So setting up account, making that simple. Sending payments, making that simple. But that's just the fundamentals. What we're really seeing now is having built a bank from scratch and building out this open API layer and locks up with the current product, what that's also enabled us to do is to tackle products for an ecosystem. So we want to simply focus on the current account and making that a great user experience. But now, because we have all of this data we've captured, just for a customer setting up a bank account. Then whenever they need to go use a complementary service, say they would need a mortgage, insurance, loan, then if they authorize us to do so, then we can share their data across to make that a seamless and simple experience. All of the kind of data and duplicate form filling that you would need to do all of a sudden is eliminated. So it's not only a simple user experience for Starling and the Starling bank account, but all of a sudden we can make this connected ecosystem. And really what we're seeing in financial services is that's the shift, is not only in terms of bringing the user experience that you're seeing from consumer technology companies, but enabling that across an entire marketplace of products as well.
No, some fascinating stuff. And you touch on several aspects there of open banking, and clearly that's a very big shift in the financial services industry, particularly in the UK for retail customers. What do you see of the role for the bank or a bank going forwards, particularly in the context of open banking and what's happening here in the UK?
Certainly. So open banking is all around open APIs. And APIs have fundamentally changed the way that software is created and brought to market in technology. Because effectively what it's meant is that developers have realized that much of the functionality they're building into their application is redundant to what someone else has already toiled over. So they don't need to reinvent the wheel. Instead, they can focus on their own core differentiating features, their own product, and instead strategically integrate in other services from other companies to fill in those needs. But this is very new. So previously, technology companies, even a decade ago, would be very heavy, very vertically integrated with one company performing lots of different functions. Now we've seen APIs to change that. But similarly, what open banking is doing is it's bringing that type of innovation and technology into banking. So we're seeing challenger banks like Starling Bank naturally doing that because it just makes sense from a technology perspective. The regulation is almost demanding that traditional banks keep up, that they disrupt themselves and their own way of offering products and services, offering this full horizontal feature set, and demanding that they keep up with change. And the main shift with this is that it's saying that the banks don't own customer data. They might be sitting on a lot of customer data, and it can be used in very intelligent and interesting ways to create new products and services, but the banks don't own that data. Customers own that data. And if they want to share that data with another company to access a different product or service, then the bank has to securely help them to do that. They need to make it secure. They need to make it very clear and transparent to the customer. They need to enable the customer to revoke that should they want to. But the idea is that this data is no longer beholden just to the bank. And so for us, we see that as very exciting because a community of developers can inevitably innovate better and faster than any one company alone. So in addition to creating a marketplace of financial products in Starling to have this connected ecosystem to make it easy to sign up to additional products, there's also a whole level of innovation that we can't necessarily predict. And that's what open APIs unlock. I think if you look at technology companies, like when Google manifested their Maps API, they didn't necessarily envision a peer-to-peer, car ride-sharing app being built on top of that. Or Facebook with their API, they didn't imagine all of the different products and services that would be linked to that for Facebook Connect. But that's the type of innovation that it enables.
So do you see the existing banks moving quickly enough, or what's your view on that? Clearly, Starling's a very clear challenger bank in the UK marketplace.
The perspective has very much shifted over the past 2 years, I would say. So initially with PSD2, pre-open banking even being announced, the reaction was more fear-based, I would say. The fear is that traditional banks, the way their business model worked is they would incentivize customers to join with some sort of loss-making introductory offer, like cashback on spending, and then they would monetize, they would make most of the revenue by upselling higher profit financial products like credit cards, mortgages, and loans. With open APIs, that means that this new world of fintechs who are looking at solving each of these particular verticals and focusing on doing just that one thing and doing it really well, whether that's foreign exchange or wealth management or mortgages, they're doing it, one, with a better user experience and at lower cost. So if customers are just as easily able to access any of these products easily and securely and quickly, then their ability to cross-sell and upsell will be diminished. So the fear from banks initially was that they would be reduced to being the dumb pipes, so the infrastructure. Now it's very much changed, I would say. So I was at Money 2020 last week, and there was so many different panels on platforms, on APIs, and what it meant. And I thought there was this really interesting conversation between the CEO of Citibank and the CEO, or CIO, I should say, of ING. And the perspective was very much that banks want to be the platforms. They want to be the intermediary. And the kind of winning line from that entire conversation was that the bank who partners the best in the future will win. The idea is now no longer that the banks just offer this entire suite of services, but everything is becoming modular. And they're aware of that. And they're aware of this need to enable banking to operate differently than it has before. Banking is becoming invisible where you need it. It'll be in your messenger app. It'll be at the point of need. It'll be through aggregated services. But the way that banks used to operate and the way that they used to offer products and services is not going to be sustainable or the consumer behavior in the future. And I think now banks are really moving into figuring out how that actually strategically works from a business model perspective as well.
I think it's a great point you make there around the platform aspect. And Russell, I wonder if I could just turn back to you and ask you, what role can platforms such as Facebook play in this? Or how do you see the evolution of the industry and the ability to serve customer needs facilitated or changing by platforms?
Yeah, so we're looking at it two ways. One is on the retain side and one is on the delight side. I guess if you think about incumbent banks, one of the big strengths is they have all the customers. And so how do you retain them? And what we're starting to work with a lot of our clients on in the UK and across Europe is actually looking at how you harness a platform where you can connect with those customers. If they're spending their time and their lives in those platforms, how do you then become more relevant and more considered? If you're not there, how can you be considered? You've only got to look at someone like a Starling bank that doesn't need to untangle itself from a traditional media model of the past. It's come in and said, right, how do I find the people that I want and also the customers that I need? And therefore, with the incumbents, we're working closely with them to ensure that they can connect with the banks and connect with their customers. Banks have very strong PII data, which means that 9 out of 10 customers we can tend to match against on the platform. And you can create a personalized conversation with those customers that's meaningful and that retains those people. And then on the delight side, it's really back to the customer experience. The benchmark in which customer experience is being created in banking is, or historically has not been necessarily the banks. It's been the Ubers, it's been the Amazons, it's been the Netflix. And so consumers have an expectation that is how, and that is the technology that is available to create these seamless and frictionless experiences. And again, we're working with clients on how do we bring those experiences to life to essentially delight the customers. And if you can create a delightful experience, that's one way in which you can actually retain customers. You're making it convenient. We all live very busy lives, and therefore consuming, saving time and giving instant gratification is very much at the forefront of what we're doing.
One of the things that comes up in such discussions, and in fact we've had a couple of questions around this, is around the monetization of data, because that flows through an open world. And I wonder if at Starling you've looked at this explicitly, and any thoughts on this?
Yeah. The question usually arises around monetization of data because Starling offers a free current account. We don't have any fees, so even if you go abroad and you use an ATM abroad, even if they charge you a fee, Starling covers that. So as a result, while people love that, the question is then, how are you making money and are you selling my data? And so for us, it's very much an adamant no. So from our perspective, we've built the bank from scratch, so both the back end as well as the front end. We've received the full banking license, so that means not only can we ensure customer deposits, but then you can do things that only banks can do. So one of those is directly connecting into payment schemes. So being a direct member of Faster Payments or BACS, and what that means is all of a sudden we can also have a B2B offering. So for any other international bank or fintech that needs access to these payment schemes, we can power those. So then we can generate significant revenue there. We also, another primary way that we drive revenue is through lending. So we have an overdraft to start with, and that's really around the idea that banks take in deposits, they lend it out, and they make money on the net interest margin. For us, because we're a mobile-only bank, that means that we have these two significant revenue streams. And then we have, additionally to that, we have this marketplace. And the marketplace is where we offer additional products and services. The idea is that we don't want to just upsell our own mortgage or insurance or other financial products like banks normally would. Instead, we just want to aggregate all of the products from across the market to give our customers transparency and choice around their options. The way that we're creating it is very much like an app store and going in the direction of creating a standardized revenue model so that if you take up a new product with any particular partner, we would get a standard fee from the partner. But it would still be at the same cost as whatever you would access it from any other point of service. So with those 3 revenue streams, that means that already gets us to a place of generating the revenue targets that we're looking for. And so not only do we not have to have fees for customers, but we're also not really looking to monetize data. It's very important for us that when we have an open APIs, we let customers know we're not going to share this with any other third parties. The third parties that we assign onto our system, we've done due diligence with, and they have agreed to also not share it with any other third parties unless upon your explicit consent. Taking those steps to ensure that people's data isn't being used in ways other than what they have expected and agreed to is core to making it successful. So for us in the future, there's, I think, a whole host of opportunity around how you can use AI and machine learning to help customers to use data and share data with a number of different players, but monetizing it in terms of selling it, it wouldn't be something we'd be interested in doing.
That's a great cue into AI, actually. And Russell, I wonder if I could ask you about artificial intelligence. Clearly, artificial intelligence is coming of an age now, and we see it in many forms of life day to day, and specifically around financial services as well. What are your thoughts on that, and from the perspective of platforms such as Facebook, how do you see that evolving, and how do you see that being taken up by industries such as financial services?
Yeah, so I mean, there's some basic AI that almost is sort of low-hanging fruit for the industry. So, you know, if I think back to my days of being in the industry on the client side, is you'd have teams, let's say, that are going to grow the business. So it's about acquiring new customers. You've got your loans team, you've got your mortgage team, your current accounts team, your credit card teams. And each of these teams have goals. They've got a certain number of units and MPV targets they need to hit by the end of the year. And so they would face into someone like our platform, and they'd look for segments then that had signals bearing credit cards or loans or mortgages. Now, actually, those people in those segments are also, if they're in the credit card section, they're also in the loans or they're also in the mortgages. And therefore, many of the banks sort of look into it on a product lens rather than a consumer lens. So if you think about the very basics and the narrative of our platform, if you were to come at it with a variety of products, but you give it to the platform to decide actually when's the right time to present this offer on a mortgage to this customer, and that will be based on certain signals that consumer is giving off within the platform, you've got a better chance of being present at the right time with the right offer, and therefore you'd hope that led to a sale. So I think there's some basics in terms of AI that the industry could gain. In addition to that, and it sort of goes back to things like Messenger, we're starting to see a shift now in the way that Messenger can not only deliver things around awareness, but also in the customer servicing side, particularly in an industry that is, let's be frank, is challenged by cost in terms of cost models and disruptors like Starling with a lower cost base. How can you innovate and how can you create servicing that enables you to answer the most basic of questions and support to your customers without the need of a telephony call center or other sort of supports around it. In addition to that, and what we're excited to see is this sort of birth and emergence of onboarding, which for us I think is a whole new way of thinking about how you bring customers onto a bank and how you then have a persistent conversation with that client throughout the life cycle of that customer.
Great answer, thank you. Last question before we wrap up, and maybe if I could turn to you, Megan, on regulation. It's a clear feature of the financial services industry. Any new entrant has to look at regulation very carefully. As a new entrant, you don't have the legacy of regulatory activities as well as not having the operations. How do you view regulation and the role of regulation in the future? Is it a positive thing for the customer? Is it something to harness? What's your perspective?
Definitely. My perspective on regulation is that it's not only critical to enable competition, but also in benefit of the customer. So previously, before being in the UK at Starling, I was working in San Francisco in financial technology. And what I had realized there, leading global products there, is that if you start a financial technology company in San Francisco, it's actually very slow to scale because they have state-by-state regulation. Whereas when you start in the UK, it's not only quite easy to start, but then you have a very proactive regulator who's really looking to help competition innovation in the UK. So it's only easy to start up a company. But now for the first time, technology companies can get banking licenses. So if, compared to the US, there's only been 2 new banking licenses that have been issued since 2008. So it's a very different dynamic. And the real help there that I would say is that it's enabling competition between the incumbents and traditional institutions, as well as new entrants such as Starling Bank. So there's that element around getting the banking license. Some of the other regulation that we've seen is around using new types of technology in financial services. So it was only in November of 2015 that the regulator said that financial services could use cloud hosting, so like Amazon Web Services, AWS, which is really important for someone like Starling because hosting data in a mainframe like on-prem is very expensive. So in order to create new technology and create it in a cost-efficient way to where you can focus more on the things that are really important around your product for your customers and putting your energy and resources there, it's important to have regulation that also enables that and supports it. With the new regulation that we're seeing, particularly with open banking and PSD2, I find it very exciting because the focus is purely on customers. So what happened is that, for those of you who aren't familiar, the Competition and Markets Authority did about a year-long analysis on the financial services industry here in the UK. And what they found was that the banks, the traditional institutions, weren't having to compete hard enough for customers' business. They weren't incentivized to either improve the price and compete on that, or the product experience. And more so than that, the fees that they would have for their products and services appeared to be structured in too complex of ways for people to easily understand what they'd have to pay, much less to switch to someone else. A common example that's thrown around quite often now is around the foreign exchange, because it was such a brazen example of how they would inflate the exchange rate and then add the fee on top of that, and there was all these hidden fees that are built in. So even if you had a free current account, they were clearly putting fees in hidden elsewhere that the customer was having to pay. So the idea with open banking is that, on the other hand, what we're seeing is this rise of fintechs. There's so many different companies who are popping up, and they're looking at solving one thing and solving it really, really well, and they should be able to be equipped to compete with traditional institutions for customers' business. So open APIs are all around, those are the ways that 2 companies can share data between each other, the ways that they can connect. And for customers, the idea there is that it creates transparency. Transparency around prices. It can lead to, one of the main examples or use cases of the regulation is aggregator services, so that you can easily compare across different services from banks in particular. So it will drive transparency, which will reduce fees for customers. So from Starling's example, we really wanted to be thought leaders in this space, so we launched a set of open APIs back in April 2017. For those of you who are familiar, it just went into effect on 13th of January of this year for all of the CMA9 or the traditional banks, and they're in a stage rollout now. But the exciting thing is it's really enabling fintechs to compete with banks, and it's really driving this way for innovation, new products and services to be created for customers. It's not only fair and transparent, but it's bringing in the type of user experiences that you'd expect from a Facebook or an Amazon or a Google, but into financial services.
Great answer, very comprehensive answer, so thank you.
Yeah, of course.
We're virtually out of time, but just before we wrap up, any final words or comments? If I start with you, Russell, please.
So I guess it's just about designing for mobile. Think mobile first, and really think about, detach yourself away from, I must drive them to the channels of my choice, to the channels of where customers are living their lives. Wherever customers are living their lives, that's where essentially you can create the best experiences and delight them and also retain them.
Great. Megan, any final closing comments or words?
Yeah, I would say, just to echo that, the focus is on mobile. Experiences not only need to be easy and intuitive in real time, but personalized, having that as well within financial services. And that the focus of control is no longer among those who have the means of production, but the means of engagement. Banking and financial services is no longer something that you do at just one particular app or location or with one company, but it's a much more connected ecosystem now, and I think that will really be the way of the future as well.
Great. Well, ladies and gentlemen, thank you for your time this afternoon. We've had two great panelists on stage. I wonder if you could join me in a round of applause for both Russell and Megan this afternoon.